Most of the time, investment funds have been focusing on the traditional institutional investment markets. And what we're seeing is an increased interest on Midwestern markets, B and C stuff, value add, sometimes core plus. The likelihood is moving forward we're going to see much more activity moving towards the central core of the U.S. and more away from the coasts. Cap rate trends are an interesting factor right now. There is a belief that cap rates are going to end up decompressing somewhat during this year. But one of the questions that I would ask based on everyone that I'm speaking with is there's no basis to believe that there will be less demand, and even if interest rates start to rise, and there's a difference between rates and the so-called risk-free rate, we don't see cap rates changing very much at all. One of the mysteries that we have in the industry is what's happening with single-family home rentals. What we're finding so far is that people that are renting single-family homes are probably not ultimately going to end up being apartment renters, but that does mean that there is a great deal of demand for single-family renters who are going to end up decoupling for renters, for example, that are sharing a house who may ultimately end up wanting to live by themselves, and they will in all likelihood rent an apartment rather than renting another single-family home. There's an increasing level of interest in investing in the United States from foreign capital. In fact, a large number of investment funds, some from Canada, some from South America, and some from Europe, are here now making active acquisitions for apartments as well as other sectors. The expectation is going forward they will continue to seek yield along with safety and mostly preservation of capital, which is why we expect this to be a continuing trend rather than something that was just an occasional investment based on this cycle. The level of development so far has been increasing, and we have an expectation that it will continue to increase, but I think it's going to ebb somewhat, and I would expect that new development will end up slowing down between now and the end of the year. There's an awful lot of properties that have permits in place, but people are unable to get financing to be able to go ahead and build these. So what we're seeing, for the most part, are lots of deals being shopped to a variety of sponsors. Those new deals that are coming up out of the ground are leasing very well and at fairly high rates, sometimes exceeding their pro formas. But that end of the market, particularly in certain places, is pretty thin, and we don't expect to see a lot of new competition coming online for a while.